Hi there, welcome to Neppy Invest. So a bit of a time for a Zip trading update. So last week I decided to try out day or short-term trading for really the first time. I did it once before about 3 or 4 months ago, and that's when I day traded Zip over a 1 hour period. It was a fairly stressful 1 hour, and I just wanted to see how my own personality suits that sort of trading strategy. So I'll talk about what I did during the week with Zip. I'll talk about what I learned about my own sort of personality and whether it is suited to that sort of strategy. And last of all, I'll talk about what I'm learning right now, particularly in regards to a book I just started reading yesterday, and a very highly recommended book. And even though I've just started reading that book yesterday, it has already given me some insights into technical analysis. So early in the week, I did do a Zip trading video. So if you haven't looked at that video, I do recommend having a look at that first. And this was my strategy. It did look like the share price in Zip was forming a bit of a base, and there were some signs that it was starting to break out on the upside. I did low risk buy on within the first hour of trading on Monday. That was at $8.40, and $8.40 was a support. So I thought if it got to $8.40, that would be a very low risk buy. There was a bit of resistance at $8.70, and when it broke through that resistance on the Tuesday, I did another buy at that point. So that's when I did the video at the end of trading on the 16th of March. So what's happened since then in the last 3 days of trading? So I've maintained those resistance and support lines at $8.70 and $8.40 because those are two very important price levels over the past week or so. So I've maintained the previous graph, then I've just extended for the next 3 days. You can see my breakout buy at $8.70. The next day, on the 17th of March, there was very bullish price and volume action in the first hour or so. So this is a 15-minute chart. So each of these candlesticks is 15 minutes long. So in that first hour, the share price actually went from about $8.60 all the way up to past $9. It was looking fairly bullish. Now, during all these days, I was paying close attention to the price action of Zip, and I was thinking this was a fairly bullish move. And then during the day, CBA announced their buy now, pay later strategy. And I think the market got a little bit spooked because from then on, there was a lot of selling coming into the market with Zip, and the share price came under pressure, and it tested $8.70. You can see share price moved to $8.70, tested it, moved up for a little bit, but then a lot of selling came in and the share price went straight through $8.70 on good volume. And that's when I decided to sell out because it fell through that. It was resistance, became support, now it was resistance again, and that was the trigger for me to sell. The next day, on the 18th of March, the share price opened at $8.40, which was the support level. So that support level held. And during the rest of trading on the 18th of March, the share price stayed above $8.40. So that could have been a bullish sign that that support level held, but unfortunately on the overnight markets on the 18th of March there was a bit of bearishness in there, and more than likely we were going to open up lower, particularly those tech stocks that were not profitable, and lo and behold Zip opened up below $8.40. So that support level that had held for about 5 days or so had now become resistance, and that was another good sign that the share price was in a sort of a dropping or bearish phase. And then the share price just went sideways for the rest of the day. So what have I learned during this experience? So the first thing is that day or short-term trading requires continual attention. So the whole week I was just looking at the Zip share price every 15 minutes or so just to see what was happening with the movement in the share price. And that sort of attention is not really suited to my sort of personality. I really prefer a more laid-back approach, and the investing or trading strategy I have developed over the last, we'll say, 10 years or so is a way more laid-back approach. So what I usually do during a day is I read all the announcements at the start of the day, and when trading starts, maybe for the first 20 or 30 minutes, I'll just see what happens in that initial period of trading, and then I go do something else for the rest of the day, and I don't come back to the close of trading. And that's the strategy I have been using. It's a much more laid back approach. I don't really care what's happening during the day. I'll make decisions after trading has finished or before trading has started the next day. So this sort of continually paying attention to the share price movement every single day, during the day, during each 6 hours of trading during the day, it's not for me. I do prefer my sort of strategy, more laid back, more of a sort of a medium term approach instead of this day or short term approach sort of trading. So I think that's the main thing I've learned, that this sort of strategy is not for me. That doesn't mean it won't be for other people. I think this is definitely a strategy that is suited to other people. But the whole thing about trying different strategies is to learn to what you are suited for. So what am I learning now? So I've already mentioned that I have started to read this book that became highly recommended to me, and that book is Technical Analysis of Stock Trends by Robert D. Edwards and John McGee. This was first published in 1948, and I do believe the first edition of this book is very expensive. So if you do have that on your shelf, maybe you've got something quite valuable. Anyway, it's gone through at least 11 editions, if I remember correctly, and the most recent edition was released in 2018, and it can be expensive, especially those most recent editions. When I had a look online for the prices, the most recent edition is well above $100, and I've given a little screen grab from Google about with some of the some of the prices you could pay, and the two really expensive ones over $100 are the most recent editions. The Amazon AU edition there, that costs $21.43. That's a republished 4th edition from the 1950s, so it's not up to date. So that's why that's a little bit cheaper. Can't recommend this book quite yet, just because I just started reading it, but I've already got some insights from the short read I did yesterday. So I'm really looking forward to reading the rest of this book, and more than likely I'm going to do some YouTube videos on this book, particularly if it's given me more insights. And I want to focus more in my YouTube footage or videos on things I have learned and try to impart that knowledge onto other people. And one of the other reasons I'm doing that is the best way to learn is to teach. I've done that in the past. I have been a tutor and a teacher in the past at a university, and I did find when you do that sort of teaching, you do learn a fair bit. So that's all I've got in this zip technical update and what I've learned and what I'm learning. Hope you've enjoyed this video. If you have any comments, leave in the comment section. Otherwise, I'm not an advisor in any sort, so if you do need advice, make sure you seek out someone who is qualified and a professional. That's all for this video. Have a good day. Bye.